We're going to be going over ICT dealing range theory to help you increase your win rate for your existing trading strategy. So let's get started. So most of you guys are aware how to use the fib tool. Well, the dealing range theory is slightly different, and I'm going to be going over a live example on the NAS 100 charts. So be sure to stay tuned till the end of the video. So for the fib settings, I'll just go ahead and show you guys quickly. Pretty simple. You want to turn them all off, and you want to only turn on the 0, 1 and 0.5. Now, in terms of the rules, your discount zones is where you buy, and your premiums are where you sell. Now, what makes the dealing range slightly different is you only take a trade and it's only valid when liquidity has been swept from both sides. So a high must take out liquidity from the upside, and then the low has to take down liquidity from the downside. So say for example, I'm going to do a quick demonstration. Let's say this is our chart. So we got a bunch of liquidity right now built up. 1 second. So we got liquidity built up right here. What we want is price to come ahead and take out this liquidity, and then obviously move towards the downside and take out this liquidity. Now you guys can see that buy side but also sell side liquidity has been taken out. Now once buy side and sell side liquidity has now been taken out, we then use our fib tool. So I'm going to get the fib tool, and what we're going to do is mark out the high and the low. So this was the lowest point and this was the highest point. Now that liquidity has been taken out, we then apply our general trading strategy and our general knowledge, which is obviously fair value gap, market structure shift. Now, for the sake of this example, obviously the liquidity has been taken out. Now we expect most likely either price will continue to move towards the downside, and if that happens, there's no trade available. But if price decides to have a market structure shift, just like this, and then we have a fair value gap that gets created somewhere down here. What we then wait for is price to tap into this fair value gap. So we will set our limit orders for long positions. We would target the next high, which is right here, and put our stop loss at these lows. So a 1 to 3 risk to reward, and let's see how the trade would play out. Obviously this is just a model example. We are going to be going over the live chart in just a second. And like that, we hit TP. Now, if this hasn't made sense as of yet, I will be going over the live example on NAS 100. Now, this is just my basic strategy model, which is market structure shift, retracement to a fair value gap, and then targeting opposing liquidity. You guys may have a different strategy, such as breaker blocks, order blocks, supply demand zone. You guys may enter off a different type of strategy, which is fine. It doesn't matter which strategy you trade. You just need to apply the ICT dealing range model, and by applying that, you can increase your win rate exponentially. So we're going to be moving over to the live example in just a second. Now, just before we do, we've had a lot of requests about our AI trading bot. I've had a lot of messages, and I'm just going to go over some of the payouts that our clients have made. So we made a $10,841 payout using our AI trading bot. You can see some of our clients got paid out here, $5,000. Another client at $1,200. Another client $4,000. Now, if I scroll down, you guys can see I'm going to go into FTMO's website, and you guys can see on the 30th of May, one of our clients passed their funded account challenge, and this was under 30 days. And you can see the testimonial for yourself. Just go ahead and show you guys. As you guys can see, he passed his phase 2 using our trading bot. Now we're going to be moving over to the example on NAS 100. Right guys, we are now on the live example on NAS 100, and I'm going to show you exactly how to use the dealing range model. Let's get started. So the first thing I can spot is liquidity being taken out right here. So all of this liquidity being swept. And I can also see all of this liquidity, sell side liquidity, being swept right here. Now that we can see that both liquidity sides have been swept, what we can do is get our fib tool, and we're going to put at the swing high and all the way down to the swing low. Now I'm going to drop down to the 5 minutes time frame and let's see what happens. We are simply waiting for an entry model, so let's see what happens. So we can still extend this out as price did decide to go slightly lower, so I'm going to go ahead and extend this out to the low and let's see what happens. So we do get a market structure shift, as you guys can see. And by the way, at this point, it is based upon your own trading strategy. My model is a simple market structure shift, fair value gap, and then target opposing liquidity. So I'm going to go ahead and mark out the fair value gap, which is right here. And we've already tapped into the trade. I'm going to put my long position at the middle of the fair value gap, stop loss below these lows, and we're going to target. You can target a simple 1 to 2, or you can target opposing liquidity. So I'm going to target this high right here. This is my buy side liquidity which I'm targeting, and let's see what price does. I'm going to extend this PNL as well. There we go, and let's see what happens. And then I'll explain exactly why I took this trade, and yeah. So I'm going to continue extending it, and I'll continue extending it. And as you guys can see, we've smashed through TP, buy side liquidity was taken out. Now, the reason I took this trade is, first of all, we were in the discount area below the 0.5. Remember guys, anything below 0.5 is our discount level where we're looking to take buys. And if we're at this level, which is the premium, that's where we look to take sells. So we were at the discount level, we had liquidity being taken out. As you guys can see, liquidity got taken out, sell side liquidity. We had a shift in market structure. We had a retracement back into a fair value gap. And that's my reasoning for taking this trade. In order to be a profitable trader, be sure to journal every single one of your trades and always have a reason as to why you're taking those trades. I hope this video helped. If you have any questions, leave them down in the description or the comment section I meant. And be sure to subscribe, like and comment.